Greetings, greetings, greetings. You are now tuned into the vault. Trust Christian, own nothing, control everything. Just want to thank you for tuning in live, listening to replay. Always appreciate everybody that tunes in live, listens in the replay. This is the vault, episode 484. What FDIC insurance $250,000 limit? Some people may say, what would be the purpose of this episode? But we want to thank everybody that listens in the replay, and we want to thank everybody that's listening right now live. Feel free to type into the chat where you're listening live from. We always appreciate everybody that types into the chat where they're listening live from. We do pop-up episodes, so always hit the notification button so you can get the pop-up episodes and get the live stream. Be able to ask questions while we're actually live. You could actually get the pop-up notifications, so make sure you hit the notifications so you can actually get that. We do pop-up episodes. This is the Vote episode 484. What FDIC 250K limit? Why did you have to do it? Well, this episode's by demand. Maybe because we've heard some people come to the vault recently about this question, about the $250,000 limit. They're over here panicking possibly because of these banks right now. And we actually are definitely saying, hey, it's something that people need to look out for. Appreciate New York for tuning in live, listening, replay. Always appreciate New York for tuning in live, listening, and replay. So, we could say that there is some things that we see in the banking sector right now that may cause people to be a little frightened. When we look at the SVB situation, Silicon Valley Bank, we sat in a room with wealth managers recently. This bank lent out to most of the Silicon Valley companies. And it's interesting that you don't hear about these companies until something goes wrong. But this bank's supposedly lent out to half of the startups. If these companies went belly up because they can't make a profit, whether they were lending out a lot of money in VC, whether they were lending out money as an institutional player or otherwise, it doesn't matter. If they were lent out, they got called in for the loans. Maybe the interest rate was too high on them. Nevertheless, they said they spilled over into the regional banks. We actually just saw we've actually seen a few banks get bought in the past 30 days, 60 days, and it's not a surprise. It's no shocker. It shouldn't be a shocker. So people say, okay, we'll get back to the point, which is what FDIC insurance 250K limit. And this is the interesting part about that is, once again, they say they have a limit at the banks on the public side. This is why people listen to the vote because they want to know about the private side. They want to know about how do you get offered the insurance after the 250K? That's what we're going to discuss today on this episode. So we've seen some banks consolidate. That happens all the time, ladies and gentlemen. Maybe they want to promote it. Maybe they want to scare the market. Maybe they want to make you think that your money's not safe. Ladies and gentlemen, those were business loans. Those weren't people's regular money. So then we saw, okay, well, we might see high net worth investors pulling their capital out of these regionals. Okay, where are they going to put it? So we get them on the line the other day with a private institution. The private institution is not FDIC insured. Do you hear the difference? Trustees come to us all the time. Oh, I want to get credit on this and credit on the trust and yada yada yada. So why don't they have FDIC insurance on the 250K after you're a sophisticated investor and you're in the private sector? Where is that insurance at? So you have to sit in those rooms, and so we're going to share our experience of sitting in the rooms because this is something that's in the public that may be scaring the public, making them think that their money is in question. Most average Americans don't even have $50,000 saved up. What are we talking about here? They don't have $100,000 in a savings account. Liquid. We're talking average. Then you go to pensions, maybe. They're tied into these banks. and we'll see. We haven't heard of pension funds going under yet. We've heard them in the past, but we're talking about like currently. What's going under is consolidation. We could almost say for mismanagement of the books with these companies. And it would really just ill-advised investments. Bottom line, when you look across the board and you say, okay, when you look at a bank, how is a bank holding and making money? Well, these banks were making loans. They made bad loans to bad companies. That's what happened. They weren't making bad loans to the regular people, because otherwise you'd be hearing a bunch of people going bankrupt right now. They're not. It's not just high net worth investors that are going bankrupt. They're not. They may have what these banks experienced was called a partial run on the bank. What that means is, and you all can go look it up. You know, everybody can look it up. We don't ever need to even answer that. But there was a partial run going on the bank. That's what was going on. From a little bit of weakness that they had at the bank, high net worth investors were taking their money out, and they were utilizing the system we're talking about right now, the FDIC after 250K limit. What is that insurance after that? That's what they were doing. It's interesting because even when we hear the whole Bitcoin thing right now in the public, it's interesting because the price has gone up of that for that asset, but it's been fluctuating the whole time. Everything's above zero. If it's above zero, it's like a stock. There's not financial advice, legal advice. Clearly, that's not even a company, and they're gaining value while Silicon Valley's going out of business because they were invested in companies. They were invested in these tech companies. They were invested in these crypto companies that you all wanted to go in and pump and dump with. That's what just happened. These companies finally went under. When you see these companies going under right now, it's because they were mismanaging the funds and they weren't even investing the money properly. With FDIC insurance limit on the private side. So we're gonna pull it up. We sat in front of some trustees about that actually a few days in a row now about this whole situation because we're currently in it. Appreciate Mississippi for tuning in live, listen, replay. Always feel free. We always appreciate Mississippi for tuning in live, listen, and replay. Feel free to hit the notifications so you guys can get the notifications when we actually go live. Make sure you double tap on that bell. We're gonna pull up. Do our best to pull up this slide right now. Where, I mean, ladies and gentlemen, the game is. When we talk about the FDIC, we're not financial or anything. But what we're gonna say is there are many banks. What happens is when you work with a bigger institution, they have a network of banks that they can put into other banks. See, what's interesting is when people talk about money market accounts and all these different things, it's so funny because we get around high net worth investors and they're very familiar with what we're talking about right now. They're very familiar with being able to have funds that are in multiple accounts, but there's a primary bank. So you're never worried. But see, people are worried because they're at the lower banks. They're at the bank that has the one limit. Well, they're not at the bank where the bank has a network of banks. Not just a one branch in style, but a network. See, they say your net worth is your network, right? Isn't that what they say in the public? Your net worth is your network, right? What is your financial network like? We would like to think that we actually are around those individuals. Uh, it's interesting because you would have to ask that question when somebody says they have like $1 billion, not just assets under management. I mean, all banks are in question. So clearly, uh, when you're dealing with whales or these type of people, even you got to get. It's just one of those things when you get to a point where $1 million is the same thing as $1 billion. It's just more or another zero over or some zeros over. Literally, you'll see that that principle is just relative to the fact that there's a 250K limit at the public side banks. So you say, okay, well, what does it look like in the private side? Clearly, you have to have some type of established something. And then how does that look in the public? It's a network, ladies and gentlemen. You think about it, people have, we were thinking, actually, here we go. Well, we might be giving up an old trade school secret here, but it doesn't matter because this is going to go on with or without you all, whether you all know it or not. So we've heard a lot of things about the BVI for a long time. This is obviously an old school, tactic. We're not promoting it. We're not endorsing this tactic or anything. We're just talking about the tactic that when you talk about the BVI, ladies and gentlemen, I mean, this is an area where this is in the public looked at as a basically not a great area to do business. And we're not knocking it. We're not being biased towards it. We're having an objective conversation based off of public sentiment, based off of the branding and marketing that's been against it. Actually, we're talking about that because whether people know it or not, there has been branding campaigns that have gone along and said that they don't want people doing business in the BVI from the states. Bottom line, there are things that people would say, oh, in the public, they discourage citizens from having second citizenships, from having property all around the world, things of that nature. These are things that people, they're just misnomers in the public, they're myths. So, in turn, it's just rather important to have, the perception of knowing, well, okay, there's a perception that the BVI is considered one of those tax haven places. That's what it's considered. It's considered, well, you're in there for tax reasons, and hey, it is what it is. We're going off with the public campaigns have been. We're not going off with this is not a biased opinion of the vault and things of that nature. These are just unbiased opinions based off of public sentiment for years, attacks on these jurisdictions. But then when you go there, they have the most yachts registered in the world in one jurisdiction in the BVI. So for all the marketing campaign of it's a tax haven, this, that, and the third, and you think about it, I mean, these are places that have the most banks in the world, the most yachts registered in the world, the BVI. Still to this day. So no, no, no. We're not gonna go to that jurisdiction. That wouldn't be a wise thing to do to go to that jurisdiction. How is it unwise to go to that jurisdiction? The jurisdiction has been strong pretty much for 100 years. And what makes you think that jurisdiction is gonna go down and for what? Oh, some people say, oh man, things happen. They do. Well, there's a lot of other probabilities that are more likely than the BVI. BVI, even if it was considered a safe haven or otherwise, then that's what it's for. Whereas people are, so not to say people will avoid it, but the marketing campaign is for people to avoid it. Whether you want to avoid it or not, that's on you. What we're talking about is that those are one of those places that the marketing campaign has said that these are not great places, but for some odd reason, and you can go do your own research and look it up. People have told us at the vault, hey, we appreciate you always pointing us in the right direction. We're pointing you in the right direction right now. When you talk about the most yachts registered, when you talk about the most banks, ladies and gentlemen, in the BVI. So when you talk about Silicon Valley Bank, and then you think about it, even recently with the whole FTX debacle going down, they were registered in the BVI. So we're not talking uncommon colloquialisms of people going into that jurisdiction and doing what they're doing. Well, okay, what FDIC insurance 250K limit looks like? That's what it looks like. BVI. Oh, you got to know the right people. You got to get in the right rooms to know the right people. Because they say, oh, man, look, we get a trustee coming along and say, oh, man, how am I going to be insured after 250K? You were worried about that before these banks started consolidating? First of all, ladies and gentlemen, if we have to assess this as, is this 2008? Banks are going under right now. People's lives are about to be changed. That's that. If we're not about to see that type of banking crisis, it's business as usual. This is just a pregnancy scare. Maybe it's a pregnancy scare for a bigger problem, but it's a pregnancy scare. It's definitely not the not having a baby. There's no there's a failure in the banking system. This is the things that they talk about in the public. Oh man, this is why they push this crypto stuff for years now, and people have lost thousands and they've lost their shirt in this garbage. Is because why? Hey, the banking system is systemically not perfect, and in turn, because of these systemic risks and problems where companies sometimes, whether the banks are cooked, the books are cooked, mismanagement. I mean, you think about it, these people are college graduates, ladies and gentlemen. So let's give it up for the academics here. The academics are actually running these corporate companies now. These people have gone to top colleges, and this is what they do. So let's give them that credit. So where are we going with these conversations? When it comes down to, for you as the asset manager, we're talking about asset management for your family, talking about asset management for the company. You know, we sat in a room recently with some very accomplished and financially well off asset managers, and what's interesting is they said we have to think about what's in the best interest of the fund, what's in the best interest of the family, what's in the best interest of the business, not of themselves. Some of these people take salaries. When we talk about the FDIC insurance 250K limit, what's in the best interest of the money that you're managing, the company that owns the money? What's in the best interest of that? Is it getting in the right rooms? Is it connecting with the right people? Or is it sitting there watching the news saying, "Oh, the news said that if you got more than 250,000, because I know I do, I got that, I'm a millionaire, I made it." You know what I mean? So I'm a millionaire, I got $250,000, I made it, but I can't have it all in one bank, and then I got to spread it out over a few banks, but I got to keep it under the limit, right? So now you're doing it instead of the network that another bank has. See, there's ways to operate in certain particular fashions, and we're really happy to have created those relationships where even a trustee says, "Well, the private side banks aren't insured." Exactly. You're sitting here say you want to come to the private side, and then you want to sit here and say, "Oh man, well the private side not insured." Exactly. It's not. I want to be in the private side. I want to be. That's literally what they reach out to the phone and say. I'm going private. I want to be in private trusteeship. And then they say, "Well, how come the money's not insured on the private side at the 250K?" Because you got to know the right people. It's not going to be in one bank. We even heard something recently where he's actually a league MVP in one of the professional sports, and supposedly he had 50 bank accounts. But think about that. How is that private? He got exposed. He has 50 bank accounts. Well, damn, they might as well told you how much he had in them. He has 50 bank accounts, ladies and gentlemen. 50 bank accounts. Oh, well, let's put this out here. Well, clearly they knew they were his bank accounts. Why? Because they were in his name. Because the bank accounts were in his name, that's public record. So they can make sure whoever's supposed to get the FDIC insurance, it goes to that name, right? Right. And he had 50 bank accounts. Were they all with the same bank? Let's see if we can pull up that story. We're going to pull up that story for you all, ladies and gentlemen. We're going to see if we can pull it up. Alrighty. Hopefully this thing doesn't make any noise. At 27 years old, has 50 different bank accounts containing $250,000. He's utilized this standard insurance coverage of $250,000, according to the New York Post. A hedge fund manager, we're not going to name his name, has advised this guy, the professional athlete, on better investment practices. So, I mean, it makes you think about it. Somebody says, well, if a bigger bank goes under, what makes you think the smaller banks aren't going to go under? Exactly. This individual has made from earnings, cleared $47 million alone in 1 year from endorsements. $250,000 limit, 50 bank accounts. It's not adding up. Exactly. But this is the public rigmarole to, hey, we're going to give you an icon. We're going to give you some public figure and make you think that they're silly enough to go put, literally, how do you put 40 million in 50 bank accounts and stay under $250,000? See, this is what they tell the public to keep the blind, dumb, and deaf and blind. And that's just being honest. Because it doesn't work that way. But this is what happens in the public. These public, news sources want to share this information. We have no problem with sharing objective information as well. We would actually like to do an interview, and it's not one of those things that people should be having those conversations in the public about people's earnings. But sometimes because people are in the public and they have the earnings in their name, these things are public record. And in turn, you see that the FDIC insurance with this situation in particular, you all can see that wouldn't add up with 50 bank accounts if somebody even made $47 million in 1 year anyways. And they had actually way more than that in earnings, in other earnings. So these are issues that high net worth investors run into. We would like to think that you're running into these challenges and that you have a network, that you have a group of people that you can work with. That, we actually talked to a trustee about that earlier in the private banking. See, this is the issue. A lot of people don't want to go through the system, but when you go through the system and you put the system in place, that's where your family is structured for centuries, because they're in the insurance sector. It says FDIC, but if you don't know how to preserve your wealth in dollars, quote unquote, or otherwise, we know what the Federal Reserve is. That's a group of families that are looking to hedge their wealth for hundreds of years. They are what people consider a central bank, but whether you all know it or not, this is the era of central banks, ladies and gentlemen. This is not going backwards. We do not see central banks leaving the dust, because the central banks are the families that are willing to put liquidity into the market. They're willing to reach into their deep pockets after they went into the marketplace and put money back into the market. The only difference is they charge an interest on their money. That's the free interest rate. Right now, it's been floating above zero. They had it at zero for years. Think about it. The Federal Reserve was lending money at zero for over 5 years and over 10 years. And now we're not at that place anymore. And so by us not being at a free interest rate, where there's no free money anymore, quote unquote, and then people, they never knew that we were in the free money zone. Now we're not in the free money zone. It's about 400 basis points higher. And so what? 400 basis points. If people talk about that, when we look at back at the 80s, people look at the 90s, people look at the 70s, there was high interest rates a lot of times for capital. Money costs a lot more than it does in 2023. The only thing is we would like the people to check into, your money's depreciating. We don't have to give you that fact, but for some odd reason we got to talk about it in the public, because even in the private sector we're talking about how the money is depreciating. The only difference is we understand that we're okay with the cost of the money. Most of the time, you got to remember, when you're in the high net worth investor sector, they usually have real estate, so they're writing off a lot of real estate and depreciation there. So that's cost of capital too. There's a lot of reasons to write off things in the private sector, and so when we look at The public sector, the public sector is going to get away with the $250,000 limit. They don't even have to pay up until $250,000 because that's insured by who? The Federal Reserve, by the central banking system. Exactly. So how's that bad? They try to say, "Oh, the Federal Reserve is not good, blah blah. The central banking, we need to get rid of that place." Like whatever. What do you know? You guys don't even know what you're talking about. Like that FDIC. If you understood how money works, it's okay. Like they have free interest rate money for a long time. So now we're in the era of not being free interest rate money. Period. And when we get back to that, maybe in our lifetime, maybe as it stands right now, we're at a just moved up some basis points to at least 300, and it may be maybe a little bit higher, and they say they might cut the rate. So we're gonna see. Nevertheless, the difference is people listen to the vote. They say, "Oh man, I don't know why Trust Christian vote talk about this stuff right here. You know what I mean? The FDIC insurance stuff. Oh no, we gonna listen to this episode, and why we gonna listen this far? Because first of all, we have people that reach out to the vote that they have more money than that. That number that you see might be big to you, but that number right there, we have trustees that have come through and they make that in definitely in a quarter, in a quarter. So they're making the million a year. Appreciate you all for tuning in live, listen to replay. Appreciate everybody that's gone through trustee training and that's gone through with this level of capital. And now we did the episode for you. People say, "Oh man, how do I get around this?" If you had it situation and now you want to come back to the vault and say, "Hey, want to reach out, Christian at trustchristian.com." Once again, it's Christian at trustchristian.com. And what will happen is we just put you in contact with the right people. That's what it comes down to. You gotta be in contact with the right people. People sitting here talking about, "Oh man, I gotta think about where my money's gonna be. I'm gonna sweat bullets." Man, that's a sad situation right now because it's really not that serious. It's serious for companies, but when we talk about people, we have yet to see any public reports of people and individually, other than the actual guys that were running these companies, say that they're underwater. Appreciate everybody tuning in live, listening to replay. Christian at trustchristian.com. Hit the notification button so you can know when we go live again. Peace and joy.